Welcome back to the Impact Trading Services Data Service. Training Forex traders how to use trends in data to book larger profits with a degree of predictability that will give you an edge whether you are a position trader, swing trader, or an intraday trader. Today we are going to look at our monthly, daily, and weekly data to plan for some larger pit moves coming up in the month of January. All right, so this is how we're going to plan to use data this week to possibly book some larger pit moves. As we look at the charts on the weekly charts, we're coming up to all-time highs. So we want to study the weekly and the monthly charts. You can see we're coming up to all-time highs on gold. So there may be a lot of institutional sell orders when we get into these areas. So we want to mark some areas on the chart of supply and demand, support and resistance that we're coming into. Now what we'll do is we'll go to the monthly range first. And we want to look at our monthly ranges here. So December 2022 is what we're looking at right now. This is January to December. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. January to December. We see an extreme here of 16,000 pips. An extreme here of 18,000 pips, 20,000 pips. So if we remove those extremes, we're looking at 12,000, 12,000, 13,000, 9,000, 12,000, 11,000. All right, how can we use that data coming into this month right now? So right now, this month has moved 9,000, almost 10,000 pips. So let's go back to the monthly data and look at some of the extremes. So we're getting up to 12,000, 11,000. Now in one day, possibly tomorrow, if price moves up 3,000 more pips, then we're into the 12,000 range in the 1950 area. Now how can we use this data to our advantage? We know the 12,000 in the last 1, 2, 3, 4, 5, 6, in the last 7 to 8 months, we have a 12,000 month here. So we may be getting into the extremes if this week we see a push up into the 1,500 area with the month already extending 12,000. Now the month may come all the way up here, 17,000. But we know by our studies that there's going to be areas of resistance before there, and there's going to be a lot of institutional orders at these numbers. So on our charts, we know right now the month is at 10, roughly 10,000. But if we draw up to the next area of support of resistance at 11,000, then we may get some larger pullbacks. So we want to plan for that. We're going to do the same study on the weekly charts. This is the last couple of weeks in December, and then we have the first 3 weeks of January. So we have 5,000, 5,000, and then 3,000. And then in December we have 3,000, 4,000, that's 35, 4, 5. So our extreme in December, January would be around 65. And then in January, our extreme was 5. So we're looking between 3 and 5. So let's see the trend right now on the weekly chart. On the weekly chart, we've got 5570 here. So again, if the week averages 5570, 4,000 puts us up into the 1950 range again. 5,000 puts us at the 1980 range. The 1980 range. 5,000, 6,000 puts us at the 1980 range. So what we want to do is we want to be ready when price moves. Should price move up into these areas, then we want to be able to look for price confirmation, because these areas are strong areas weekly and strong monthly areas of supply. And this is the first time price is coming back into these areas of supply. So there are most likely institutional orders that are waiting to be filled here as price moves up into these orders of resistance and these supply orders. Now we're going to do a daily study. So study on the day. Our extremes on the day will be, the last couple of days, our extremes would be, let's see, the 13th. That's 2884 for the 12th. Let's see what the 13th is on the day. The 13 data is 2956. So we have 3,000, 3,000, 2,000, 1951, 2884. So that's roughly 3,000, 3,000, 2,000. Now, if we look at the extremes for the first week in January, we have January 3rd, 2,500, 2,800, 33, 4,000. All right, so how can we use that data these days right here? These were more consolidation days. Price was deciding whether it really wanted to shoot up, and then really you had a lot of institutional orders here in these areas. You got pullbacks of you have 2,000 pip pullbacks in these areas. So these would be areas where you do want to trade short. That's 2,000 pips where you can trade short profit. And then if you are a position or trend trader, then you can book your profits here and then move your stops up behind these bars. So we use a red line for the stop. So when you have a pullback here and you can plan your pullback as a swing trend and position trader, you can trade this down here for 2,000 pips, or you can take profit here and then move your stops here to continue the trend. And that's why it's important to study data. So for this week, tomorrow, for the Asian session, we're in a supply area that we know of already. The 1920 to the 1950 area on the weekly and the monthly chart. Do you see this area here on the week? That is a strong area of resistance. Now price may shoot through there if there's a news event or there's a lot of liquidity above here. But on the chart, the 1920 to 1950 area looks as a strong area of support. I'm sorry, a strong area of resistance. Should price move higher, then this area most likely will become support. So on the day, we can plan for a daily move from here up. Should this day move up to 2,000 pips or 2,500 pips or 3,000 pips, then we know we are at an extreme from the 5 to 6 day average. if there's a news event or we're coming to the end of the day in the New York session and we start getting sell signals here during the 13, 14, 15, 16, 17 hour, we start getting sell signals at the 1950 area. Should the day move up 3,000, then we know that that day is probably at the daily extreme. So price usually will retrace, and we're moving into a strong area of support, a strong area of resistance. When price is moving up, we go into area order blocks of supply and resistance. When price is moving down, we go into order blocks of demand or support. So price is moving up right now. So we want to plan for that, and that's how we're going to use the daily data. So tomorrow during the London, New York session, Asia session, we've seen Asia sometimes move not as much as the London or New York session, and that's just because of volume. But now we can plan for the day, and this would be a larger profit move because we're talking about weekly and daily levels now. So the data tells us when price gets into these weekly daily levels, we see 2,000 pip pullbacks and more. And here's a couple of examples. In July, when price pushed down into demand, and then during the month of July, here, price pushed down into demand and then retraced 8,000 pips. This looks as a area where price may push up into these areas and then retrace for a large retracement for us to be able to plan some larger moves on the weekly, monthly, and daily charts. All right, traders, use every tool to your advantage to become a consistently profitable trader. Come over to the Impact Trading Services website, click on playlist, then you'll go down to Impact Trading Services data service, click on the data service, and then watch the videos, study, do your homework, and become a consistently profitable trader. And then if these videos are giving you good knowledge and you can apply them to your trading skills, please support the channel so we can grow the channel, grow the community, and continue helping traders become consistently profitable in 2023. All right, have a great trading week. See you in the next video.